To understand the global market setup well as well, we are now joined by Andrew Ferris, the CEO at Ecognosis Advisory. Hi, Andrew. Good morning. Well, thank you so much for joining us this morning. Now, you know, S&P 500, NASDAQ, they're both at record levels. So let's talk about these first. Now, given this, what does this rally really signal? Do you think in the long term, the market is really going to be able to absorb the uncertainty that's been there because of tariff, especially with respect to China at hand and also to some extent India?
It signifies, in fact, that we all look at the same statistics and we come to completely different conclusions. The markets apparently were very pleased with inflation numbers in the States. Well, I'm afraid I've got my Bloomberg in front of me, and let me read out for your clients and for your readers and for your listeners the following. Okay, CPI, which is a straightforward plain vanilla index, it was on April 2.3, on May 2.4, on June 2.7, and on July 2.7. 2.3, 2.4, 2.7. It has been accelerating. Accelerating. Okay, the core inflation rate, which is very important. Okay, again, I'll give you the same numbers: 2.3, 2.2, 2.4, 2.6. It has also been accelerating the last 3 months. And we will be looking very quickly and very near, of course, the core, I should explain, it was 2.8, 2.8, 2.9, 3.1. And the PCE, which is the favorite one of the Fed, also was accelerating from 2.3, 2.2, 2.4, 2.6. All those numbers are up in the last quarter. I don't see where inflation is getting better. It isn't getting better. It is accelerating and continues to be above the 2% that the Fed is aiming. So this idea that the Fed is going to cut interest rates in September, I have no idea what it is based on. So S&P is an all-time record high. I keep telling my clients, don't get anywhere near that because this is superbly overvalued. And it's based on, effectively, if I may say so, on nonsense interpretation of numbers.
That's as far as inflation print is concerned. But Andrew, if you can tell us, basis this inflation, the street is penciling in some rate cut from the Federal Reserve next month. What will your expectation be, and how many rate cuts are you expecting for the rest of this calendar year then?
I don't need to repeat. I hate reading numbers to your audience. It's horrible. I cannot. When somebody does that to me, I switch off. Okay, completely. But here, the numbers are so blatantly obvious. What it means for me is that the Fed is not going to cut interest rates in September. Simple. Whatever Trump is saying and whatever he's threatening to do to Powell. Powell, I think, is a very decent person, and he's not going to be bent over and do that because Trump threatens to fire him and start a lawsuit against him. I mean, what a performance, what a behavior for the major country in the world towards its own central bank by threatening to do things because he's not obeying to the president. The president, constitutionally, is not there to fix monetary policy. As far as India is concerned, at least in the case of India, inflation is coming down. The RBI did hold interest rates in their last meeting, and they said it is getting better. So if their next move is to cut interest rates, it's not because Mr. Modi called the governor and told him, do this or otherwise I'm going to fire you. You know, India is a very good example of how democracy works for people like the United States that claim they are the shining example of democracy, which they are not.
Absolutely. Andrew, you were just talking about how, S&P 500 has rallied, but you think it is overvalued. So are there any particular, any other asset classes apart from equity or any other equity markets apart from US, like you were just talking about India, any other emerging markets, that you feel are more attractive at this point?
Well, simply looking at markets where index has been up year on year in US dollar terms, very important, US dollar terms, because whether we like it or not, the market still operate on US dollars. We definitely have Sensex doing quite well. We have South Korea doing quite well. We have Taiwan doing quite well. Okay, to some extent, we have been even having Hong Kong doing very well, but for a very specific reason. and that is because of the performance of Chinese companies in Hong Kong, not Hong Kongese companies in Hong Kong. And also, most of the European Union has also been doing well. And I'm afraid my needle is stuck. Okay, I'll say that loudly. Defense stocks, they are doing brilliantly, and they will continue to do so. I know it's controversially asking people to put money in companies that produce means of war, but that's the way it is. And given also the likelihood that the discussions over Ukraine is not going to lead to anything quick, then the war remains. And also Israel told, irrespective of what the rest of the world is thinking, they are going to occupy Gaza completely. In other words, the war there continues. I'm not gloating. I think it's horrible that people are dying, but at the same time, I will be failing my clients if I don't tell them defense since more than 2.5 years have been doing very well, including India defense companies, including several Asian defense companies. All these are big buys because their performance has nothing to do with interest rates. It has to do with expenses on defense.
So that's the word coming in on global markets and the market setup and how it is looking like for day trade. Andrew, thanks so much for taking your time out and joining us here on ET Now and helping us understand what the outlook is for the US markets going forward. Thanks so much for joining us today. On that note, we need to slip into a very short break, but